The consumer durable sector has enjoyed long-term tailwinds in India, and that's hardly a secret, right? A fast-growing developing country like India will have ever-growing demand for TVs, washing machine, ACs, microwave ovens, refrigerators, and so on. So it's little surprise that the BSE consumer durable has risen over 5x over the last 10 years as compared to the BSE 500's rise of over 3x. Now, the listed basket of India's consumer durable companies is all set to expand. LG Electronics India, the Indian arm of the South Korean consumer durable giant LG Electronics, has come up with an IPO. The company is raising about 11,600 crore and the IPO is open from Tuesday, 7th October to Thursday, 9th October. Should you include this iconic company in your portfolio? Does it make sense to invest in this IPO? This video will provide you with the answers to these questions. Hello and welcome to ET Money YouTube channel. In this video, we will comprehensively analyze the IPO of LG Electronics India so that you can decide if it deserves your money. This video belongs to our IPO playlist. If you want to watch more such analysis, you can explore it. The link is in the description below. So let's start with the IPO details first. The key IPO details of LG Electronics IPO are on your screen. The total issue size is about 11,600 crore. This makes it the third largest IPO of 2025 after Tata Capital and HDB Financial. The entire issue is an offer for sale or OFS, and there is no fresh issue component. So what happens in a fresh issue? In a fresh issue, the company raises money through the new shares, and in an OFS, existing shareholders sell their stake. The existing shareholder selling part of its stake is the parent LG Electronics Incorporated. The IPO opens on 7th October Tuesday and closes on 9th October Thursday. The lot size is 13 shares and the price band is 1080 to 1140 rupees per share. So the minimum investment at the upper price band is about 14,820. The company's current share count is 68 crore shares. Since there is no fresh issue, post-IPO also it will remain at the same number. However, the promoter holding will come down from the existing 100% to 85% post the IPO. There is a reservation of up to 2.11 lakh equity shares for eligible employees, along with a discount of about 108 rupees per share. Let's now take a look at the company's business and industry. But before that, here is something important. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on ET Money app. The interest rate starts at 10.75% and there is no fixed EMI. Pay interest monthly and repay the principal amount whenever it's convenient for you. Plus, there is also no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app. And there is more. For the next 3 months, any withdrawal that you do, you will get a special rate of 9.99%. So go for it now. So as per the company's RHP, as of 6 months ended June 2025, LG Electronics is the #1 player in major home appliances and consumer electronics, excluding mobile phone, by value market share in the offline channel. The company is a market leader in India across product range categories. It has two business segments, home appliances and home entertainment, with both B2C and B2B offerings. The home appliances division deals in refrigerators, ACs, washing machine, air purifier, microwave ovens, and a lot more. The home entertainment division sells television and audio devices. Both the divisions also offer repair, maintenance, and installation services. The home appliances division contributes about a third of the revenue, while the rest come from its home entertainment division. The company also generates revenue from its services and installation operations. It stood at rupees 666 crore, rupees 577 crores, and rupees 485 crore in FY25, FY24, and FY23 respectively. Apart from products, the company also manufactures several key components such as compressors and motors. So as of June 2025, LG operates the largest distribution network among leading home appliances and consumer electronic players in India. It has over 35,600 B2C touchpoints, 463 B2B trade partners, and is present across multiple distribution formats. The company provides installation, repair, and maintenance services through 1,006 service centers across India. It has two manufacturing units, one each in Noida and Pune, with an installed capacity of over 1.45 crore products. The company is planning its third manufacturing unit in Andhra Pradesh and expects an investment of rupees 5,000 crore in it. To facilitate storage and movement of its product to and fro from its manufacturing unit, LG Electronics has a pan-India supply chain network of 25 product warehouses, comprising 2 central distribution centers or CDCs and 23 regional distribution centers or RDCs as of June 30, 2025. So this was about the company's business. As far as the industry outlook is concerned, the company's total addressable market or TAM is expected to grow to about rupees 6.19 lakh crore in calendar year 29 from about rupees 3.25 lakh crore in calendar year 24. That's a growth rate of about 14% per annum. Now this is higher than the growth rate of 12% per annum between calendar year 2019 and calendar year 24. The level of penetration across key consumer durable categories remains quite low. This indicates ample room for growth. So as an industry, consumer durable have bright prospects. So now let's take a look at LG's key financials now. But before that, do subscribe to this channel if you aren't a subscriber yet. Do press the bell icon so that you never miss a video from us. Alright, so you can check LG's key financials on your screen. So over the last 2 years, the company's revenue has grown from rupees 20,000 crore to rupees 25,000 crore. That's a growth of about 10.7% per annum. During the same period, the company's profit jumped by 28%. So from rupees 1,300 crores to over rupees 2,200 crore. The company's cash flows from operations appears to be sound. The company carries almost no debt on its book, and this gives it a strong standing. Its EBITDA margin over the last 3 years averages at about 10.9%. It has grown from 9.5% in FY23 to 12.8% in FY25. Finally, LG has a strong ROE profile too, with its average ROE at 36.2%. So overall, these financials do appear to be quite promising. Let's also compare LG's financials with those of its peers. LG has mentioned 4 listed companies as its peers. These include Havells, Voltas, Whirlpool, and Blue Star. So first, in terms of market cap, LG is just behind Havells. It's going to be larger than Blue Star, Voltas, and Whirlpool. In terms of FY25 revenues, LG is ahead of all its peers. Its revenue is over thrice that of Whirlpool and over twice that of Blue Star. As far as revenue growth is concerned, LG is behind all except Whirlpool. However, in terms of profit growth, it's ahead of all except Voltas. But do note that Voltas' high profit growth is due to a low base rather than outstanding performance. LG's average EBITDA margin puts it ahead of all except Havells. Its average ROE puts others to shame, with only Blue Star giving it some fight. Like its peers, LG is low on debt as suggested by their debt to equity ratios. Finally, if we compare the valuations of LG with its peers, LG is at a discount to all. So overall, not only does LG do well compared to its peers, its cheaper valuation makes it quite a tempting proposition. One important thing here. So if you're looking for financial data of listed Indian companies, you can easily find it on ET Money website and the app. Not just financial data, here you will find key analytics information also. Just type the name of the company in the search bar and get going. This brings us to the next section. In IPO investing, it isn't sufficient to evaluate the business and financials alone. One must also pay attention to certain IPO-related metrics. We have discussed them in our video on analyzing IPOs, so you can watch that video to learn more. In that video, you will also find 5 IPOs hack to increase your odds of success in IPO investing. So do watch it. As always, the link is in the description below. Here we will discuss the red flags in LG Electronics IPO based on those metrics. So first, the entire issue is an offer for sale and there is no fresh issue. In an OFS, the money doesn't go to the company but to selling shareholders. So the company itself is not going to benefit from a majority of the IPO proceeds. As we saw, the selling shareholder is the promoter LG Electronics. So the entire IPO proceeds will go to it. Second, the outstanding litigation against the company stands at rupees 4,744 crores. This is almost equal to LG's last 3 years of profit. Thus, any adverse development on this front have the potential to dent the company's profitability decisively. Third, the company also carries high contingent liabilities at about rupees 2,700 crores owing to high tax claim. A contingent liability is a possible obligation that may or may not arrive depending on a future event. So low to nil contingent liabilities are desirable. In addition to this, LG also has a contingent liability of rupees 315 crore in respect to royalty payment to the promoter. Fourth, the company has to pay royalties to its promoter as per the licensing agreement. This royalty payment has risen from 1.63% of the revenue from operations in FY23 to 1.87% in FY25. Fifth, the company has no exclusivity arrangement with its promoter. So as a result, the promoter can engage in the same line of business as the company. Sixth, the company has reported a declining market share across key product categories. And seventh, the promoters LG Electronics Incorporated has extracted a high dividend from the company in addition to royalties. For FY23 and FY24, those stood way over 100% of the company's profits. So these are some prominent red flags. For more risk factors, you can read the company's RHP. Let's summarize the key findings of this analysis in the concluding section. LG Electronics is an undisputed leader in the consumer durable space. It's a famous brand that needs no introduction. There are high chances that you have used an LG product as well. Backed by LG Electronics Incorporated, the company has a strong parentage. This will likely keep it ahead in the technological realm. The company's financials look impressive and the valuations are cheaper than those of the peers. However, not all is well with it. High amounts pertaining to outstanding litigation and contingent liabilities are likely a sword hanging over the company's head. Royalty payouts and the uncertainty around them are also a source of concern. But this is not a new issue, and Indian companies with foreign parents often tend to exhibit this phenomena. Nevertheless, they are always a source of concern for the domestic shareholders. Ultra-high dividend payout to the promoters suggests an opportunistic bent on the part of the promoter. Also remember that the company is not going to benefit from the IPO proceeds. What's more, even after the IPO, the promoter shareholding will be at 85%. So the promoter will have to offload more stake to meet SEBI's minimum public shareholding requirements. So the company's strengths are well matched by its shortcomings. Given these, will you apply in LG Electronics IPO? Do let us know in the comments section. This is all I had for you today. Hope you liked it. Don't forget to like, share and comment. I will be back with another video soon. Until then.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.